Good morning, everyone. Sound check. Good morning. Hi, good morning, Delphine. Thanks for checking in. Thanks for helping me out with the sound check. Awesome. Thank you. Thank you. Good morning, everyone. It is Thursday, May 14th, 2026. New day, fresh start. All right, welcome to Pitbull Traders Morning Game Plan. I'm your host, Manny. The purpose of this show is simple: live futures trading, real-time technical analysis, and actionable setups, all with the focus on building the real trading skills and mindset designed to drive consistent profitability. Every morning we come in with one goal: map out the structure before the open so that we're operating in alignment with the day's dominant forces. Not guessing, not chasing. All right, guys and gals, let's get after it. Let's map it out. Let's get aligned with the market. We're going to do, as we do every morning, we're going to start off with our higher time frame analysis. That's the chart that you're seeing on the left. And we're starting off with the with the 2 hour time frame. Let's just blow that out to the 4 hour. And immediately what we can see here is what we've been mapping out every morning this week, coming in and pretty much since the March 30th, 63.53 low. The market continues the Artemis move to the moon, right? We've been mapping that out, and it's just been a parabolic, just an awesome move. I think we're witnessing history here. I read somewhere earlier today that this has been like this, I think the 6th strongest rally ever in the S&P. So I think that that's important to point out. We're witnessing a bit of history here. And Artemis launched on, we're calling this the Artemis to the moon rally because it launched on literally the day that the Artemis mission launched from NASA. And it's just been nothing but awe-inspiring. The Artemis, we're going to have to map out whether Artemis is going to round the moon and come back down sooner or later. We've been tracking this target for over a year on the chart. We've had 7450 to 7500 mapped out on the chart. As you guys have been following along, we've been tracking this for a while now, as I said earlier, for over a year. And just this morning, we made a high of 74.99 quarter. Awesome, amazing move, guys. I can't believe it. I never thought in a million years we would get there in such a short period of time. But nonetheless, here we are. All right, so jumping right into the 4 hour chart. Immediately what points out, we just got higher lows. Yesterday, we did the same thing. We put in a higher low again. I'm going to kind of trim this down a little bit so we could get a little bit more, get a little bit better review down to the 2 hour time frame. Yesterday, when we were on stream, we mapped out the head and shoulders target because the pattern kind of formed out as a inverse head and shoulders. And when you measure it, this would be the left shoulder. Okay. For those of you not familiar with the head and shoulders pattern, you can Google it. It's pretty standard chart pattern. So this would be the left shoulder here. Left shoulder. See, left. This would be the right shoulder right here. I'm not going to try to write it out. That's just going to look horrible. Let's just stick to the charting, which is what I'm good at. So here's the left shoulder. Here was the right shoulder right here. You can see the top in there. Here's the head. And when you measure it peak to trough, it targets 75.25. And guys, we've been knocking our head up against this trend channel that we had to have some structure, some idea for where we're going to run into problems. And when you get into new all-time highs, and charting 101 is just, you just have to kind of use measurements, use Fibonacci's, use your tools that are available to us to try to get an idea for where price might run into problem. But again, none of these lines would indicate a sell. It would just be for structure so that we have an idea of what the potentiality of the move is. Okay. So immediately we can see on the 2 hour chart, the price is just straddling the 9-period moving average, but not much more to see. In order for there to be any type of significant structural change, right? Well, the first need would be we would have to take out yesterday's low. We had a really strong rally off yesterday's 73.99 low, and price just blasted off. Ultimately, we're up here now trading. We just made a high of 73.99 quarter. All right. So we're going to follow a little bit of a different format this morning, in that I'm going to put this chart out as a 15-minute, and I'm going to give them an equal distance. Let me just get the right chart up. All right, so we're looking at two 15-minute charts. But we're going to do what we do every morning, not changing it that much. All right, we want to stay consistent. We want to respect the process. We want to make sure that we have a sound fundamental approach each and every day. All right, so we're going to do as we do every morning. We're going to map out the most bullish argument, the most bearish argument. Then we're also going to talk a little bit about a bullish trap trade or a bearish trap trade. We're also going to map out the potential dreaded sideways move. And then we're going to get into we're going to talk a little bit about value area, because I think with what we saw yesterday, it's important. It gives us a good reference to teach a little bit about value areas and why they matter so much. So those of you who are very familiar with market profile, a refresher is always good. And to those of you that it's new, stick around, because you're going to want to hear this. It's very important. It matters. Market profile is very fundamental to the market. I know Tom comes on every day and talks about it at 2 p.m. So you can get everything you need to know here about market profile on a daily basis. All right, guys, so let's jump into it. Let's just map out on the left-hand chart. We have two 15-minute charts here. We're going to map out the most bullish argument on the left. And then on the right, we're going to map out the most bearish argument, so that this way, folks tuning in on socials and everyone watching can have both of those iterations right on their screen. Okay. All right. So left-hand chart, we're going to go with the most bullish argument. All right. So price is opening up at 74.85. Okay. And say we open and we get an opening drive, right? Not what we've seen recently, but we can't rule it out, and we're going to stick to the process. We're going to respect it. And so say we're opening here 74.85 and we get the open drive. Immediately, the first reference on our radar is going to be what? As it is every day, using our day time frame references to map out the structure, we're going to look at the overnight high, that being 74.99 quarter. And if price reaches there and gets above it, and we pull up above it, and price then retraces, demonstrates acceptance, pulls back to it, it holds. It could even pull back and test this lower structure here. Let's call that 74. Let me just make sure I get the right numbers here so everyone has that dialed in. 74.90 to 95. Okay, maybe even get a test of yesterday's high. But what we're looking for is the most bullish argument, right? Okay, so mapping out the most bullish argument, we get the pullback to the overnight high. It holds that support. Maybe we dip in a little bit, but ultimately it just wicks below and we start to move higher. At that point, we're entering longs. We're using the 74.95 reference point as our risk marker. Remember, respecting our drawdown limits on those evaluation accounts. At that point, we're taking our scales along the way, but we're over the overnight high. And the Artemis move is continuing to play out. So at that point, we'll look for long entries, and we can take our scales along the way. All right, so that maps out the most bullish argument. On this chart, we're going to map out the most bearish argument. So left-hand chart's going to be bullish, right-hand chart's going to be bearish. All right, so we're opening at 74.84, 74.85. And instead of going higher, we get the liquidation break that we've been kind of seeing throughout this week and also last week. And immediately what we have to look at and focus on is yesterday's high, 74.8375. It's closely, and yesterday's high value area high for yesterday is also right at that same price, 74.8375, which makes things really easy for us coming into this session. Okay, so remember, value areas are what? Where 70% of yesterday's volume transacted throughout the range. Okay, and typically that's a range, and so we're going to get a value area high and a value area low. Value area high comes in at 74.8375. Value area low comes in way down at 74.33. We'll talk about that in just a minute. All right, so we get the move lower, and we immediately price immediately breaks. It's a liquidation break, and we see that price demonstrates acceptance within yesterday's range. Okay, so if we're in yesterday's range, immediately what we're thinking is, hey, Overnight, the price gapped up higher, looked above yesterday's high, and those prices were rejected. Now we're back into yesterday's range, and there seems to be a balance in the market's interpretation of value for the ES. At that point, we can entertain some short ideas, maybe some short scalp trades that with our making sure that price stays below yesterday's high. So that's going to be our risk marker, or whatever local high we put in there. Okay. And then we can entertain a short idea that gets us down to what? Our overnight low and the settlement. Overnight low is 74.71. And our prior day settlement, which is where prices settled at the NYSE close, is 74.69. Okay. So again, if we get that liquidation break just off the open and we get a pull up, right, and price is unable to breach over yesterday's high, 74.83, at that point, we can entertain short ideas, and with our risk marker being the local high that gets put in, and we can start looking for short trades to get us down to the settlement and the overnight low for a gap fill. Okay. All right. So that maps out the most bullish argument and the most bearish argument. Let's talk about the bullish trap trade. All right. So say we're opening here, 74.86. And price rallies, okay? And instead of demonstrating acceptance above yesterday's high, instead maybe it looks above it or it tests it, and there's immediately we start to see 5-minute wicks, maybe even a 15-minute wick. And what we don't see is that strength and momentum in that move. And at that point, what we can start to entertain is, okay, we're getting rejected from the overnight high and price is petering out. Okay, so everybody that's gonna, get long as soon as price looks over the overnight high, they're gonna be trapped and they're gonna start liquidating as soon as we come back into the overnight range, and that would be 74.99 quarter. Okay, if we come back into range, at that point we can start entertaining again short scalp ideas, right? With our risk marker being the local high that gets put in on the look above the overnight high, or even the test of the overnight high, using that range as our risk marker, making sure we don't fail those evaluations, making sure we stay funded, okay? And then we'll entertain a short idea, and we're going to use that as our risk marker. We'll get short, we'll take our scales along the way, but ultimately our target is going to be yesterday's high, 74.83.75. There's a little bit of juice on that trade because, the overnight high being 74.99, and getting down to yesterday's high, 74.83. All right, so there's about 15, 16 points in that trade. We're going to estimate it, it being futures, and we have to account for fills. So say we get 12 or 10 or 12 points on it. Excellent trade. I think anything that gets you 5 or 10 points on ES is a fantastic trade. All right, so maybe even if we get into a runner, maybe we even get down to the gap fill, but we'll gauge the strength and the momentum of the move if that materializes. All right, so let's talk about my favorite, the bearish trap trade. All right, so we're moving over to the right-hand chart. That's our bearish chart. And in this time, we're going to get the same liquidation break. And instead of price stalling out, we just get to settlement. Remember, price always tends to bounce at least somewhat at the settlement, right? Algos, computers, they're just programmed to buy it blindly. So that's an excellent tell for us, because at that point, we're going to gauge the strength of that bounce. So if price touches the settlement and suddenly we're 5 points above it, or 6 or 7 points, like, hey, you know what? That was just a rejection from the settlement. Price fill the gap, and now we're going higher. At that point, we start kind of change our approach and we start looking for long entries or wait for price to demonstrate some acceptance. All right, but say it bounces there and it peters out, the bounce is anemic. Okay, at that point, what we want to do is see price get back below the settlement, right? Let it break below the settlement after the bounce. And then at that point, we can start looking for short entries, right? With our risk marker being that settlement, being the overnight low. And I'm sorry, if we're covering the bearish trap trade. So say we get below the settlement, all right? And instead of getting that strength and momentous move lower, what happens is that price then retraces and gets above the settlement. Okay, so if price gets back above the settlement and gets above the overnight low, at that point, we're going to start to see if price is demonstrating that acceptance I just talked about after the bounce, after the look below of the settlement, look below of the overnight low. And if it does reclaim the overnight low and the settlement, 74.69, 74.71, At that point, we start looking for long entries, right? Knowing that we look below, we kind of trap some bears below the overnight low. And typically what we're going to see is a higher low form. We can use that as our risk marker, okay? And then we can start entertaining long trades that get us over the local pivot and looking for our first target to be yesterday's high and value area high. I really like that trade. That trade tends to materialize really well. And us being in an uptrend, it's a high probability trade. As you remember yesterday, we got just about the same trade, right? We looked below the overnight low and price looked below it. The overnight low was somewhere about 74.05, I believe. And we traded it. The overnight low was down here at 74.10. We traded as low as 73.99. And then ultimately we wicked, we reclaimed it, and it was on to the upside. All right, so remember that look right here. That's the kind of look that we're going to be looking for on the bearish trap trade. All right, guys, so that covers the most bullish argument. That covers the most bearish argument. That covers the bullish trap trade. That also covers the bearish trap trade. Let's talk about a little bit about the dreaded sideways move. I know we don't want to think about that very much, but we have to. We want to stick to the process. We want to make sure that we have a good holistic approach to the day. Let me get my screenshot and then we can move forward. All right, I'm going to clear this screen. All right, so say guys, we're opening, right? And we get back into yesterday's range. So we lose overnight high and we lose yesterday's high and we start bouncing between the settlement and yesterday's high where we look above, come back in, maybe make a little higher, but ultimately we come right back into yesterday's range, but unable to gain any traction below the overnight low, and we come right back into range. Again, if we start to see price settle in the range between 74.65 and 74.85 to 95, at that point, we have to change our approach. We want to start thinking about scalping the edges or with minimum amount of risk. Typically, what I want to do is I want to scalp or enter scalp trades, hopefully on the long side, so I can catch a breakout, being mindful of the higher time frame trend. I want to be in alignment with that. Again, what we try to do here is always be in alignment with the dominant force. All right, so that covers the dreaded sideways move. I hope that doesn't materialize. I hope we get some nice price action. Yesterday was a great day because if you were bearish or if you were bullish, you really got something to trade on both sides. As long as you didn't get greedy and you stuck to your process, there was something for everyone. All right, so we're going to switch this back out to our higher time frame. I really like the 2 hour, so I'm going to frame that up. I'm going to clear out these markers and clean up the charts here. The one thing I wanted to talk about is value areas, right? And the reasons why they're so important and they matter so much is because, we thought yesterday, and it's not marked here on the chart, but yesterday's value area high was just in the 73 to 7,400 area. And price looked into the value area and immediately it was rejected. Okay, let's see if I can bring that up here on the profile chart. Hang tight. I think we'll be able to see that a lot better there. But what happened was a price looked into the value area and immediately was rejected, right? And that should have been the tell. If you were bearish and you were looking for a gap fill and so on and so forth, and you were short into that, that was the tell right there that, hey, the market is looking for higher value. Because they looked into what was the highest value or the highest portion of the prior day's value range. It touched it and then immediately it was rejected. Price just immediately moved higher. Okay, so keep that in mind for today. Value area high. If we get back into value and we start to demonstrate acceptance in value area, that's something we're going to want to keep our eyes on. But let's mark down the opening print. Remember, we use the open print, the first print of the day, as kind of our fulcrum, right? Our idea is there, if we're trading above the open, we're going to put in a green candle on the day. And if we're trading below the open, we're going to put in a red candle. So we want to use that, again, as another tool to gauge the strength of the day and what may transpire over the day. Okay. All right. So let's dig in here. Let me clear this out and get the open print in here. Hang tight. Let me get that marked off on my chart. Okay, and so our open print for today is 74.81. Make sure you have that marked down on your chart, or at least write it down. If you guys are checking in on mobile, just put that in the back of your, frame it in the back of your mind. Make sure you know that price. It's important. It matters for the reasons I just stated. We're going to get that marked off here, and then we're going to jump in. All right, so immediately, hey, remember that we're kind of knocking on this upper trend line. I don't expect it to hold. Each time it gets tested, it gets a little bit weaker. This market, it's just been off to the races. It's hard to, I don't really see the benefit or it doesn't make much sense to be fading this move. I know a lot of people fall into that mindset of, hey, how much higher can it go? Well, I can respect that it's difficult to buy the market at these highs, but it's also difficult to catch a falling knife, right? Those cut you. And so the one thing we want to remember is that respect the trend. If you're going to put risk on, right, do it. Put the risk on where it follows a logic chain, right? So what are the charts telling us? Higher highs, higher lows. The trend is up. Let's not argue with it. None of us are economists. I know I'm not. I'm not going to try to figure that out here. A lot of smarter people than me have tried to do that, and they have failed. I'm a trader. I'm a technician. My evidence-based trades are based on what I see on the charts. So I'm always trying to follow that and stick to my process. All right. So let's see. We have the open here. We're going to take a quick look at the internals. So immediately off the open, where we are 1.8 to 1 positive on the NYSE, 1.6 to 1 positive on the NASDAQ. All right. NASDAQ and Q, they all look the same. I think that the Russell has been a little bit of the weaker, kind of leading the way on the downside. I think that's probably more tied to rates than anything else. But yeah, so let's watch this upper trend line here very, very closely, being also mindful that this head and shoulder pattern is likely to fill this target over the course of the next couple of days. But we'll keep an eye on it there just for visual reference. All right, so immediately what we're getting, right? So we didn't talk very much about the overnight inventory, and that's my bad. But here what we're going to notice immediately is what, guys, we talk about every day, right? What is the condition of the overnight inventory? Well, to get that, we always look at what the settlement was. So yesterday's settlement was here. Terrible drawing. Yesterday's settlement was 74.69. And we can easily see from this chart, guys and gals, we can easily see all the overnight trade was above the settlement. So our inventory is 100% net long. So how do we use that information? How does that help us frame our trades better? Well, there are two expectations with the overnight inventory. Okay, so either the overnight inventory is going to be corrected in the RTH session, the regular trading hour session, or that overnight inventory is going to correct. If it doesn't, by meaning there's going to be a counter trend trade to that. If it doesn't correct, if there's no counter trend trade to that, then that's just a confirmation of the overnight move, and it typically signifies a stronger market like what we're seeing here. And if it does correct, then we reassess and we use our structure and our markers to gauge what is actually happening. All right, so let's go over to the trading charts. Let's start to understand what exactly, let me see, what exactly, using our NinjaTrader indicators, where this might be going. Okay, so immediately here, I just want to frame this out. All right, let's get the Thinkorswim chart up that has our levels on it. All right. All right. Let's get these. Remember, if you're following the market blueprint, get the levels there. You can see what the expectations are, what areas matter, which ones don't. On that market blueprint, we have a 74.92 setup that would typically act as a continuation long, but on the first touch, which was in the overnight session, it faded. I'm looking to fade it again. Let's see if I can get an entry here. Hang tight. All right. And the only reason why I'm looking to fade it, which is a counter trend move, is simply because of the overnight inventory. I will not overstay my welcome, but I have several data points that tell me that it might move lower. One being the overnight inventory, two being that it is a structural reference that was planned from last night. I want to get long above it, but typically those areas fade on the first touch. And so I'm going to be looking to enter on a move there. I also have another data point that points to an AM low. If you guys are following the execution clock, you can find that on my X feed at Manny_trends. Look it up there. You can learn more about it there. Just watch the order flow here carefully. All right. Okay. All right. Immediately, you can see here a little bit of a wick. All right. Let me just dial in here on the order flow. Thus far, our high is 72, 74, 92, 75. 7 contracts at the high, so we have a bit of a taper, and we're seeing a little bit of a delta divergence here. That's not enough. It's not enough yet. Let's just be careful here because we know how much the ES likes to trap. You shrink my focus. Yep. It's not. They're pressing up. Let's see. Yep. Moving higher. Moving higher. Moving higher. Okay. Yep. It looks like we're beelining for that overnight high. All right. That area was 74.92. Okay. So no entry there, guys. No entry there. For me, I'm going to hang tight here. Let's get the algos going. Let's get those turned on and get an assist from them. Make sure I have these going for me. I should have had them on already, but I was really interested in giving you guys a thorough explanation of that value area, and I got wrapped up with some other stuff, but no harm, no foul. There's always another trade around the corner. No need to be in a rush. Plenty of day. I also know that my read gets stronger as the day goes on. All right, kind of switched up on you guys. I'm on NinjaTrader now, so let me know if you can see those charts. Let me know which one you prefer, if any at all. All right. Again, we are strong here, strong off the open, looking for a test of that overnight high. Okay. Being mindful of that trap trade. Let's just pay attention here. Coming close to it. Overnight high 74.99 quarter. We just traded a high of 74.98 half. Getting some div here. Getting some div. Staying alert. I want to switch this out to MES. Okay. Okay. Getting some div here. What are our ticks doing? Let's take a look at our ticks. Okay. Yep. Our ticks are just confirming this move higher. Let's wait for it. Let's see if we get that test up there to the overnight high. If we don't, that's going to be a pretty big tell for us as well. But thus far, that divergence kind of evaporated, and now we're pressing higher again. So no entry there. No entry there. Watching the ticks. Fading a little bit. Making sure that I have these allocated correctly. Okay. Okay. Yeah, no entry there, guys. It's just you're just pressing higher. Just tagged it. All right, we just tagged the overnight high. We breached it by a tick. Strong market, man. Strong market, guys. Here, strong market. Strong tape. Stay with it. See if we get the breakout long here. See if we get the breakout long. All right, we just looked above it. Looking above the overnight high right now. Still entertaining the idea. I want to see if we get back above, see if we can get back below, gain some traction. If not, we're looking long here. Oh yeah, this is pretty strong. See what they decide to do with it. Oh man, what is that? No, 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 no. Okay, scratch that. A little bit of a hiccup there. I'm supposed to be on MES, man. I didn't know I was on ES. All right, here we go. Here we go. Testing higher, testing higher. Let me know where you guys are checking in from. Kind of had fun with that yesterday. Getting choppy up here. I'm just going to sit back and watch this, see how it plays out. That is not the high right now, so we're looking for it to break out here. Sticking with the trend. This is just an amazing move. 7,500 is being tested right now. Yeah, and it looks like we're going to gain some acceptance above here. Hi, Adrian. Yeah, just thanks for checking in. Toronto, Canada. You saw the Rays yesterday. So yeah, I'm not a big Rays fan, Adrian, but I'm a New York City transplant. But hey, I'm glad that the clock worked out for you yesterday. Yeah, it's a great tool. Check it out. It's on the feed again today. I'm glad you guys are getting something out of that. There are a few things, we all have price, right? The clock gives us a timing mechanism. What we're expecting today. Again, that's put bids 7,550 round, nice round figure. They're hitting them. They're hitting them pretty aggressively here. Let's see if these bears get trapped. They're pounding them. Yeah, look, they got trapped. They're trapped. They're going to get run over right here. We're going to get the breakout. Let me switch back to the Thinkorswim chart. These areas are always really, really dicey, guys. Really dicey. So just hang tight. Nothing going on. It's just been nothing but upside. Nothing but upside. Looking above the overnight high. They're hitting the bid. They're hitting the bids, guys. Sellers are up here. All right. 7,500 got liquidated. All right, they looked above when 75.02 quarter, 15 contracts came off at the highs. 75.02 quarter, guys. Mark that down. Make sure you're aware of it. But no, every time they sell it, it's like bang, they come back and they get hit again. So no entry. Let's just watch it. Dial in on the order flow here. All right, watch that O2 quarter, 75 O2 quarter. They need to take that out right here, keep the move going. The sellers came in both at the overnight high and just above it, but each time they sold, it was up until the area of 800 contracts were hitting at 7,500 quarter. They just hit them again. All right. But each time they hit them, like they're being pretty aggressive on hitting those bids. But each time they do it, again, you could watch order flow as I do, and then you can see two things like them aggressively hitting bids or aggressively lifting offers. But if they're hitting them like what I was just calling out 6, 7, 800, and price is not moving lower, that means there are buyers there, right? So they're selling, and there's buyers. They're lined up, ready to take whatever they're offering. Again, watching it here for that breakout move above the overnight high or for the rejection. This is our inflection point, guys, right here. All right. The only two prices that matter 75.02 quarter, 74.99 quarter, 3-point range. Shrink your focus. Yep. There you go. Those sellers got banged up again, and they're moving them higher. Let's see if they can breach that O2 quarter. We want to see it feels like it's just going to be. Oh, there we go. There we go. Selling again. Oh, all right. Let's see if they can get some traction. Yeah, I'm definitely not participating in the long. I'm going to wait. I want to see a close above, at least a 5-minute close. I'm not going to fade it. Not yet anyway. I am looking for that. The execution clock. Check it out. Okay. All right. I'm going to hit it. All right. Let's see what happens here. Come on. Let's go back below the overnight high. See if they can get them to stick. Short up here. Coming back in on them. Let's see what we have here. Looks like we're getting that move lower. Just watch 98 quarter. Got to stay below. Popped it. I'm out. That's it. Done. Oh, yeah. They're going higher. Look at this. They exploded. Exploding higher here. All right. Here we go. Poppage. All right. So that's that. Let me know what you guys seeing. We can go. What you guys are trading. If you guys are in short, long, what's your call here? Talk to me. Let me know what you got going on. This thing is definitely strong. I think I tried the short there at when we traded lower. I thought we were going to get rejected, but immediately I got trapped with like the rest of them. Now I do have a algo trade long on. Let's see, what do I? Let's see. Oh no, dang it! Thought I did. All right, no harm, no foul. It's a long day. Guys, sound off if you're in the pit. Let me know who's with me today. If you guys are checking, so check out our private feed. The link's in the description. All right, we're getting that move lower. This is just a strong market, though. Look, it keeps bouncing off the overnight high. Let me just get this out to a 5-minute. Yeah. I'm gonna let this play out. Give it the first half an hour. Give it to 10:30. Try to trade that first turn. Toronto, Canada. Welcome to the show, Adrian. Welcome to the show. Hungry Ghost Dog. Good morning, Large Void. First time in the pit. Welcome, Hungry. Nice to see you. Where are you checking in from? Louisville, Kentucky. All right, cool. Yeah, one of my buddies who I coach. I'm a baseball coach, as some of you guys know. Okay, look at that. It's breaking down. Heads up. Let's not get trapped up here, guys. Remember, use that execution clock. Yeah, one of my buddies that I coach with is from Louisville. He played ball there. He went to University of Louisville. Louisville, sorry. Make sure I get that right. We in Illinois. Okay. We got some traders in the other room that are from Illinois, from that Chicago area. All right, look, going right back up, guys. Coming back up to test that overnight high. Buyers keep showing up. I mean, the sellers are trying to press it lower, guys. They're definitely trying. They're definitely in here trying to press. And it's just a question of these are all real. Giving you guys a real time read here. It's all a question of whether the buyers absorb that selling or whether the sellers are able to push through. And when you're operating in real time like this, it's just you just never know. You just have to see who wins the battle, who wins the fight. But thus far, on the 5-minute, you can see here on the right-hand chart, thus far, we've wicked above the overnight high. That's what we have to go with so far. So let's just stay alert here. We could come back, like I said earlier in the overnight, in the pre-market prep. We came down, we stabbed down, we tested that band there at 74.93. We went, I mentioned 74.95. We went as low as 74.93 and immediately bounced, right? Okay, so immediately bounced from there. Strong. Ticks went down to the 0 line. Let's see, they're coming back in on them. You can see here on the red. Again, first target is going to be the yesterday's high if you're short. If you're long, then you're waiting, right? You're waiting to see if these 90 to 95s hold. And then if not, we're looking down at yesterday's highs. I might have to try this trade again. All right. I'm going to hit it again. See what I can get. No, I'm too low now. So be it. Okay, look, came down just 91s, right? That moving average is right there. We know that. Okay, we have VWAP, volume weighted average price, down at 74.90. Now we traded as low as 74.91 quarter. All right. Our internals are still positive. The Russell's a little weak. All right. Maybe I was a little bit early on that trade. But it made a lot of sense, though, right? I'm okay with that, with taking that, with that, it was a nominal loss. Any loss that I take that's like, I don't know, 3 to 4 points, I just, based off of real time reads, I'm just considering that like a cost of doing business. I just paid up for some information. That's all. All right, moving right back up. Yep, we just went down 91 quarter, traded back up, trading back up, wicking up, wicking up. Yep, strong tape. All right, got that pullback here. Gotta be looking at longs here. Let me know how many of y'all enjoyed that show with Danny yesterday. I know she came on at lunchtime. I really enjoyed it. It was pretty cool. Got a lot out of it. It's always good to lunchtime to kind of cool the heels, and um, so many different tools out there to help you with the trading. Looks like probably may need to trade a little bit lower, right? Maybe fill that gap. It's really dicey up here, though. They're trying to press it. They're trying to keep it higher. It's just been an explosive move. Back to the trade plan. 74.92. Looking at that level here. But I'm against the clock, so that makes things dicey for me. Trying to see if I can get a decent get a guest speaker going on today. Hang tight for that. I might try these again. Let's see. Try them again. All right, getting that move lower here. Right. There's a reason for that. I'll go through it with you soon. But the clock is 1, and then the overnight inventory is another. Man, what is SPX trading? Let me see. Just keep one eye. There's a really big divergence that I noticed too. I'll go over you guys in a minute. Yep. Oh boy, nice move lower. Yeah. Getting that move lower. All right, so it's peeling some off here, peeling one off here for 5 points. Oh shit, I have the wrong chart up. Oh yeah. About to take the other one off, just a quick scalp. Let's see, monitoring this algo trade as well. All right, looks like we're bouncing off again. Auto X. Yesterday, large void point. Yesterday's session was just what the doctor ordered. I needed a visualization break. It's been a while. Yeah, I kind of like those. I was talking to another trader buddy of mine during lunch, and he was sharing his insight or his take on it. And I kind of thought that, it's not for everybody, but that stuff is. So what I get out of it is more about, uh, how should I say, like what I get out of it is more, knowing when I have a cluttered noggin, like I like to say, when I'm just like all, crowded in the brain and stuff. Some of that, yeah. So that's when I get like too crowded, too much stuff going on up top. Okay, got a signal here. Let's see what we get. Right. Yeah, I'm gonna hang tight here. Not doing anything. I just don't like the way I'm gonna wait for this to pan out. I mean, but we're oscillating, holding the gap, right? But we are unable to get above and gain any traction above the overnight high. We just came down to yesterday's high. Let's see if we gain some acceptance. We got to get back above the overnight high. If not, it's still just a fade. It's still just a choppy. I dread the sideways move. Yeah, it looks like we're gonna go in, guys. Looks like we're gonna go higher. We'll see. Hard to tell, man. We're stuck in this, really, really shady zone. We've got to like, um, just, Oh wait, no, 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 no! Don't do that. When we're in this chop zone, I'm gonna switch out the risk zone. I've got a nice juicy payout coming out of this account, so I don't want to risk too much. Submitted for another one yesterday, so I just want to stay more grounded. I want to stay mindful of the risk. Diverging signals here, not much has changed, right? We're holding the gap, but unable to gain traction above the overnight high, right? So we're bullish, but bullish without conviction. What is more valuable? Knowing, let's see, Cynthia, how can I frame this question? Knowing, let's see, like what I'm trying to ask, I guess, is, how, what's, how valuable is knowing when to stay out? That could be one of the hardest things to do. I think, you know, trading itself is probably, putting on the trade is probably easier than staying out because your brain's looking for that dopamine hit. Oh crap! Wait, I lost it. Did I lose you guys? Nope, I didn't. It is now up. Yep, it is now up for sure. Yep. All right, moving higher, guys. Moving higher. Let's go. Let's blast off. I am not in this, by the way. I'm not in this. I am flat. If I do pull the trigger, I will let you know. I will let you know. Looking for that continuation move above the overnight high. All right. Let's be mindful here. Strong trend. Let's see. This is A4. All right. Allow that to execute. We're going to allow the, oh, crap. All right. I got to get this one turned on. Looking for that pullback here on the A4. See if we get that pullback now. It would be nice if I can get that executed automatically for me. Auto. Been a long week. Feels like there was a lot of news drops this week. PPI, CPI, like all that crap came out this week. And it's just been feeling like a really long week. I don't know about how you guys are feeling. Oh, moving lower now. Yep, that's why I said I didn't want to. You got to be careful up here in this zone right here where we are. We're just in the middle of nowhere. Oh, what happened here? Wait, let me just make sure I got this right. Start day 3. Day 3 of the move. It's getting a little choppy in here now. Get back onto the sink or swim. Yep, coming back up to the overnight high again. Back up to the overnight high. Yeah, look, we just tested the overnight high and faded. It's really choppy. Really choppy. Let's see if we can get some follow through here. You've got to anticipate or expect a breakout, but it's just not happening. Make sure nothing's being auto X'd over here. Okay. Are you guys? So let me ask you a question. Are you guys? I tend to be a crappy trader around the open. I typically am like a 10:30 guy. Do you guys trade better at the open? Do you trade better in the afternoon, midday session? Do you even know like what time is your good time? What time is your bad time? Took me a while to figure that out. Glad I did. Yeah, I mean, thus far, you know what we have to read, right? Is that any attempt at a gap fill has been, has just not been well received. I mean, seriously. Um, this just looks like the gamma squeeze is going to continue. Going to continue. Artemis is rounding, it's getting to the moon. It's got to round it. Eventually, I guess it comes back, but who knows? Yeah, we're going up. No, make no mistake about it. No mistake about it. All right. He's got me long on the Artemis move got me long on the 97s. Sorry, not the Artemis move, but what is this? No, that's incorrect. Sorry. That is not valid. Manny, give me your latest prices. There's lag between UK and YouTube. Yeah. Okay. Thanks for asking, Simon. So right now we're looking at 73. Hang on, let me get that chart up. Look at 73. Sorry, 74 quarter. If we get above 74.99, we're looking for to get a close up there, and then we're looking to buy that for the long. Ultimately, I think we're going to pop another 20 from there. I think we're going up as high as, I mean, guys, this thing could go. Let's see, 25. Yeah, it. Let's see. Hang on. Let me just get this. What is that price? We're going up to 75.23, 75.20 to 75.25. I think it's a decent target. Get above 7,500. I mean, we demonstrated acceptance. They tried to fill the gap, inability to. We're in we have to assume that our low came in early. If not, we're going to put in a higher low, but we're breaking out here. So, Simon, above 7,500, we're long to 75.25. Kind of rocky on we have these really long prints. Yep. Okay. 70 above 75. Is it above 74.95 to 7,500 long to 75.20 to 75.25. Let me know if you read that great. If not, I'll repeat it. Let me know. Large voice says I just sorry, Bruce says I wait until after 10. Yeah, so Bruce, I'm with you on that. I like to wait. I like to sit it out. Unless I have like a valid setup, I can almost justify it. But there have been countless. I just do better when I wait. Um, and I know a trader who only trades the open first hour. But then large voice says, I just avoid the first 5 minutes. Opening range trades seem to work, overnight levels too, but otherwise I avoid step trades. What do you mean by step trades? Come on, baby, let's push. Come on. You know you can do it. Consolidation higher. Got it. Yeah. Man, I was browsing over X yesterday. Sorry, earlier this morning. Man, I tend to wake up pretty early. Nicholas Darvis, how I made 2 million, the box. I tend to get up pretty early. I've always been an early riser. This morning, I woke up at like 2:30 and I started tossing and turning. And I was like, screw it. Let me just go to the office and I'll get tired and come back for a nap. It just never happened. And but I was just doom scrolling through X and stuff, and I, I I couldn't believe some of the stuff I was reading. I mean, some guys were just. I mean, there was this guy on there that was fading the rally, right? And he was like selling puts all the way up. And it was like his equity curve was going like this, and the chart was going. The chart was going this way, and his equity curve was going that way down, like crossing. And I was like, now and look, that's why it's important to be in the right community, to have a group of traders around you, somebody to say, hey, wake up, okay, even if you think you're right, stop betting money on it because the market disagrees with you. Wake up, come around, smell the coffee. All right. It's important to have that network. Don't trade in a box alone. All right, looking for longs on pullbacks now. We have the acceptance. So anyway, his curve was like straight down. He was showing he showed a screen. So somebody was like testing him in the comments, and they said, "Hey, let me see, show us your equity curve, like his account." And he showed like one trade, and it was like of a $3,000 account, and it was like at $128. It was just like literally straight down. He was buying puts all the way up, and look, I get it. It's hard to buy this up here. It is. But that's when you have to figure out who you are, what you are as a trader, and figure out your weak spots. Because, you just have to hold your nose and buy it. It doesn't matter what you think. And so many arguments about inflation and Iran and all, and it's like, all right, whatever. But the market's rallying 17%. The economy is not the market. And so anyway, that motivated me to I penned a new article. I just got into it. I'm going to be putting that out on my X feed today. It's called "The Markets Are Not the Economy." Look out for it. I'm going to put the finishing touches on it. It's actually almost done. I think I just have to put a bottom line on it. Because look, the inflation data, all this crap was like being talked about. All right, guys, let's see. Looking for that pullback here. Got one long on, but waiting for that. Got the breakout. Had that one long on, but okay, here we go. Reverie. Okay, crude time. Time to show your charts. Time to show your cards on the Manny Diamond. Diamond continuation or diamond reversal. Call them put spreads. both locked and loaded. See if I can recruit one of the guys. Like to get well, we'll see. Don't want to announce it anytime soon, but all right, guys, let's lock in above the overnight high, right? Let's see what happens here on the pullback. Again, looking for longs on the pullbacks here. Looking for those longs on the pullbacks. I need a pullback, so I'm just gonna buy it. Ready, set, go. Just joking. All right, guys, quick programming note. Rev's going to join us today here shortly. Lend us his insight on crude, the crude trader. Yep. So looking forward to that. He's going to be joining us here shortly. Come on, baby. Come down. Come and get me. Come down. Come and get me. All right, guys. Quick bathroom break for me. And then shortly thereafter, I'm going to be joined by Rev. So hang tight. Simon. Yes, Simon. I work from home. Yep. I work from home office. I've contemplated getting some office space with a buddy of mine, but can't beat this 30-second commute.
You there, Manny?
Hey, Rev. How's it going, bud? Thanks for joining.
Yeah, no worries. Happy to be here. Thanks for having me.
Yeah, sure. Always fun to have Rev on. Hey, for you guys who are just joining us right now, I'm Manny. I'm from Pitbull Traders. I'm your host here every day. We're tracking right now the ES. Let's just go quickly over the ES before we introduce our guest. We're tracking the ES. The only price that matters right now is 74.99 quarter. That's the overnight high. We're looking for 75.20 to 25. Ultimately on the top side. Let's wait for a closes above here. Price demonstrate some acceptance, and then we can move higher towards that head and shoulders target. There's also some levels up there, and the market blueprint level as well. We're joined by Rev here. He's our resident crude trader. He's going to lend his thoughts on crude. Rev, I am going to let you speak to the folks while I go use the little boys' room really quickly. Thanks for joining me.
Okay, make sure you mute your mic.
Sure. Yep.
Hey everybody.
Are you okay with that, Rev? If not, I can just hang out and keep you company till that happens.
Yeah, no sweat. Either way, it's fine, Manny. I think what I'll do is just first respond to the, I've had a bunch of people contact me via direct message, and I haven't been able to get to all of them. So hopefully you guys can forgive me on that. Oil seems to be the in thing, and I am not used to that at all. But in short, understand. I very much enjoy the interactions. So if I haven't got to you yet, don't take that as any sort of a slight. Just it's and it's not only on here. It's family members. It's the guy who cuts my lawn. It's everyone wants to know what's happening with oil. So here's the thing. I've been posting the Manny Diamond, as I've decided to call it, in honor of your baseball legacy, Manny. That's been forming over the last several weeks here. And we're kind of at the point now where it's either going to be continuation diamond or reversal diamond. The fundamentals certainly support a much, much higher leg up here.
Hey, Rev, do you mind putting that chart up so that the folks watching on socials can get some insight and follow along?
What might be better, Manny? If you can, I posted that chart there. I mean, if you want to copy and paste that. And
okay, hang on a second. Yep.
Then that's fine too. Because I'm on the daily. It's not the 5-minute chart that I'm posting. So.
Okay, where is it? Okay, right here. All right, let me just see what I can do with this. Hang on.
Thanks, Manny. I find that when I screen share, it tends to not work. I mean, I also have 285-inch screens that all have dozens and dozens of charts on them. So,
okay, all right, gang. Here's the chart.
The Manny Diamond.
Yeah, let me just see if I can blow this up a little bit.
Please send $14.95 each time anybody uses the term Manny Diamond to Mr. Iano. And
it's funny. All right, I'm gonna leave you with Rev here. I'm gonna go use the little restroom. We'll be right back.
Yeah. So if anybody wants to throw questions at me, now is a great time to. But anyhow, we've been gyrating in terms of price action for the last 2 months, basically, since all this drama in the Middle East happened. When is there not drama in the Middle East? Pretty much never, I guess. But normally what happens with these types of geopolitically motivated events is that you get a big popcorn trade where it flies up and drops right back down when everybody realizes, I think Danny posted the other day, when the bombs start flying, you better start buying, referring to the stock index futures. And, and that's been the case. The thing to consider, though, is the backdrop, which is that we are still in a 15 million barrel plus a day, which is 15%, as much as 20%, but 20% of the global crude supply comes through the Middle East. A lot of that, or some of that rather, has been able to be rerouted and redirected, but it doesn't change the fact that we have never seen anything of this magnitude before, and it's been going on for some time. And what we're kind of like is the college student who's got a $3,000 limit on his Visa card and has run out of money and is now doing cash advances on his Visa card, and everything still looks fine, but it's not. And so they are going to have to do something very significant to get this done. There's only 2 outcomes that I really see here, or 2 probable outcomes, which means neither of them will happen and something totally different will. But we're either going to see people just accept that Iran controls the strait, which I have a hard time seeing, or they're going to have to, duke it out until there's a last country standing. I don't think anybody wants to see that, of course, for both the human and the market reasons, but it just seems like that's where this is headed. Everybody is dug in and entrenched, and and I just, if you can tell them, if you've got the Donald Trump or Iranian regime decoder ring, I would love you to send it to me so I can borrow it for a bit. But in any case, that's where we sit, and crude inventories are drawing like crazy. That is the one inarguable fact here. So I'll get to a couple of the questions I've been asked the last couple of days here. Yeah, so this weekend, I've made mention of this before, but I am not a military strategist. I'm just a crude trader. But one of the things that you know, to keep an eye on is that this weekend is the first no moon in Iran since April 17th. And, you know, as we all know, no moons are generally when militaries like to be active. Now, that's just a wild guess, you know, take it for what it's worth, which is that and a nickel get you a cup of coffee. But you know, they can't let this go on indefinitely for all the reasons everybody already knows. And so and Iran knows that, and they're just waiting and slow walking and slow walking. And you know, and they're going to continue to do that because they've got an awful lot of leverage right now, which is obvious. Another question that I was asked, which is this going to create, is you know, is the demand destruction, I keep hearing that word a lot, that we're seeing going to continue, and where does that land? Keep in mind something. When you have 20% supply loss, all of the demand indicators are based on that supply being consistent. So when you lose supply, it appears like you're losing demand, and we aren't really losing that right now. Crack spreads have come in considerably in the last 2 days, which is certainly something I'm keeping an eye on, because that's something that you know, is a leading indicator for where oil is going. So crack spreads, or refining margins, you know, are made up of basically distillates, gasoline, and crude oil. So 3 barrels of crude oil refines down to 2 barrels of gasoline and 1 barrel of distillates, meaning diesel, heating oil, jet fuel, that kind of stuff. So when you see heating oil and gasoline start to fall without crude, it's usually only a matter of time. Usually, now we're at a contract roll and we're coming out of refinery maintenance season, so right now it's a little bit, you know, you have to read the tea leaves a little bit more than just that simplistically. But crude usually can't sustain a rally unless the products are rallying with it. So that's the basic rule of thumb. And if you want to go back in history and take a look at that, you can see that, you know, we talk a lot about statistical reliability here, maybe not in those terms, but that's really what we're talking about, which is, you know, come up with a process that is statistically reliable, that shows some sort of net gain over time. That is one of those things that'll do that. I think, you know, David Dubé's system is, you know, probably the best and easiest to understand that I've seen in a very long time. And you can certainly apply that to this. And I think he does. David trades crude, right?
Yes, I believe so. Yep.
Yeah.
He has a strategy for it. Yep.
Yeah. So you know, so going back to the Manny Diamond. So we've branded a couple of these setups now. You know, I personally, you know, my stronger conviction is that we follow the first base follow line, if you will, and break upwards. You know, a month.
Yeah. So
go ahead.
I'm sorry, Rev. Maybe if you can hang tight. I'm having some tech issues here. Let's see if I can get this up. Hang tight. I don't have the chart up, but I want to get it up right now. Let's see. Okay. Boom. Okay. And now let me make sure the people on socials can see that. All right. All right, hang tight. Just give me a second here, guys. Thanks for bearing with me. And just wanted to give everyone, while I'm trying to fumble with this setup, quick update. We are interviewing right now currently someone who's going to come on and kind of help me out with the production of the show. To make sure that we got the chart shares up, that all of that is kind of jiving, and that the folks that are watching on social and people in the pit can follow along and see everything there in real time, get the most out of it. Again, always trying to bring everybody a high quality value show. With that said, let me see why is this? Oh, okay, this is pinned. Got it. Okay. All right, Rev. So let's look at this chart here with Rev. All right, Rev, this chart is really busy. I think one of our guys in the chat said, Rev, it looks like a tic-tac-toe chart. What am I looking at here? What are the levels that matter?
Okay, So yeah, fair enough. It's simpler than it looks. I mean, you know,
I get it. I can see it easily, but yeah, maybe if someone else doesn't, and I'm sure he was just David was just joking around. But yeah, anyway, let's just take a look here. Let's see what we got. Talk to me.
So you know, so diamond patterns are fairly rare, and you know, and it's pretty easy to see that we've got a diamond with a bull flag on the top right corner. And so, you know, you can have diamond continuation and diamond reversal patterns. Typically, a diamond reversal happens at the end of a long, steady trend, whereas diamond continuation patterns happen more typically when you have a sudden burst upwards and a bit of a frantic consolidation before a leg up. I have no idea which one it's going to be. Fundamentally, my bet is that we break out to the upside. But Operation Epic Jawbone has been in full swing, and you know, and we could see it break lower. So how to play that? I mean, the way to play that is, you know, as Confucius, I think, said, the best time to plant a tree is 20 years ago, and the second best time is today. And so, yeah. So, you know, on the board here, we talked about this setup, you know, a couple of months ago, is that the best way to play this is with call spreads and put spreads. So I have a 215, 245 call spread on, and then an 80 and 60 put spread. So in other words, you can buy the options you don't have to hold outright contracts. You can just buy the options, and whichever way it breaks, you know, you kind of win either way, as long as you haven't gotten crazy about the levels you're expecting and overpaid for your options. But one of the things that, and this is probably the most important part of this, there's been a lot of job owning to keep the price of oil down, understandably, and I don't blame them, and I understand exactly why they're doing it. They've done an amazing job of it so far. But what that has done inadvertently is it's created a lot of volatility, which has prevented a lot of big money from just holding outright positions. And so as a result, they have turned to options. And so what we are setting ourselves up for here is a physical squeeze that is going to be exacerbated by a big gamma squeeze. So if the price of oil starts rising and starts rising significantly, you're going to see a lot of these guys who wrote these calls have to start buying crude contracts to hedge against them, which is going to fuel itself and create quite a gamma squeeze. Do I think it's going to be long term? Maybe, who knows? Typically they're short lasting. But anyhow, that's what my conviction thesis is. But you have to be you know, you have to be ready for anything with crude. You know, I joke all the time that anything can happen, and it usually does. So so you have to, you know, you have to be alert to both sides of it. And here we are on the right side of a diamond where it is likely to break significantly one way or another. That's my my sense.
And for you guys watching, you see me drawing it out right here. I'm just kind of working out Rev's diamond pattern loosely. I'm just going through it myself. But yeah, so Rev, that's a pretty wide range. Guys, let's focus in on real quick on crude, and then we'll get back to ES. But for those of you watching, just to tune you in, right? If you're just joining us right now, I'm Manny from Pitbull Traders. We're tracking the ES. And we entered long at 74.95 to 7,500, looking for 74.20 to 74.25. We're being joined by Rev, who's our resident crude expert. You heard all the, you know, the big news on what to expect and what the kind of the macro outlook is for crude. Now let's get into the chart. Let's take a look at this. Rev, to me, it looks like we're kind of bouncing around here at this 100 to 101 area for the RTH session, for the crude session, 100 to 101. What's the trade here? Are we because it look a lot? I'm looking at the higher time frame, right? It looks like an EKG to me, right? We're bouncing up and down here. You know, you guys can see that here. Like,
so your bottom yellow trend line, and I posted this in the room earlier for anybody who you know, or in one of the rooms I posted it. I'm not sure who can see what rooms, but probably all the better to, you know, to spend time in more than one room, I guess. But anyhow, you know, a month ago, like if you look at crude, it is characterized by sharp, abrupt sell-offs, usually headline driven or tweet driven. And so a month ago, you know, that sell-off couldn't sustain below 80 bucks a month ago. A week ago, that sell-off couldn't sustain below 90 bucks. And this week, any of the headline driven sell-offs haven't so far been able to sustain below 100. So that is something to keep an eye on. Until it breaks that trend, the risk is to the upside, given the backdrop of the supply concern.
God, this thing is moving really technically. Just eyeing it up. Look, you can see pullback, right? All right, so let me walk you guys through the thinking here, right? So we had this impulsive move up, pull back, right? And then where do we pull back to? We pull back to our 50% retracement right in here. Okay, follow the thinking, follow the logic chain here. Bear with me, guys, and I'll walk you through it, right? So we got this pullback, and then what? We broke out, right? We got this breakout, all right? So now what we're going to do, we're going to anchor our next move to this low. So we're going to measure this distance, right? Okay, so let me clear out these markers here. Just trying to do this quickly so I can get back to the ES because we got a trade going on right now. But here, look and see. So we had this move, right? Oh, gosh, no. We had this move, impulsive move, pulled back, moved higher. Impulsive move, pulled back, moved higher. Okay, so now we're going to anchor from this low, from the pullback low. We're going to pull up to our most recent high and look at where we pulled back to, right? Halfway back of that move. Look, it's holding its 50% retracement. Let's see if we get, and let me just walk you through it again, right? So impulse, pullback, extension. Impulse, pullback, extension. So right now we're in a pullback of this move, and now we're looking for the extension higher. I mean, that's the way, just quick bird's eye view of the way I would look at it.
Yeah, absolutely. And I mean, and again, you know, if crude, just look at the chart, it can go extremely far either way, and it usually overshoots. But definitely options are the name of the game here, if that's what you're into. Otherwise, you can trade outright contracts like I'm doing during either, you know, during the day, to limit the Globex risk. So, you know, but it is, you know, you made a really important point, Manny, and then I'll let you guys get back to the ES, is that it's trading very technically. If you had no idea that there were headlines happening or any of the drama going on around it, you can trade it just using the charts. You don't have to decode the entire global energy complex to make successful, consistent trades at it. You know, you just have to follow the technicals, be consistent, don't get too crazy with your position sizes, and have a long, medium, and short-term trading approach so that you can take advantage of that, of the inevitable big swings, and still put some meat and potatoes on your table each day on the intradays.
Yeah, well said. And you know what, guys, there is an argument here. We have, so I'm just counting them up. So just from eyeing it up, right, applying some Elliott wave to it. So here would be one, right? Oh God, that's horrible. Let me just redo that. So here would be our first wave, and then our pullback for 2. This would be our third wave, and this would be our fourth pullback. And we could expect a 5 up here somewhere. Just eyeing it up really quickly with Fibonacci levels that kind of are giving us the measured move or validation of the move higher. All right, so that covers crude, guys. Let's just jump back real quick to ES because this thing's exploding on me. All right, guys, gang, look at this.
Manny.
Right?
Talk to you later.
All right, thanks, Rev. Appreciate. Hey, everybody, say goodbye to Rev. Thanks for joining us. Thanks for giving us the insight on crude. We're gonna go over this chart more a little bit later because I think we should be trading this puppy. All right, so really quick, let's get back to ES. Got this explosive trade. So hey, guys, look, this is what we were looking for, right? We were looking for acceptance, right? Acceptance above the overnight high. It's exactly what we mapped out in the pre-market, right? So we found the acceptance. Let's drill down to the 5-minute, get a little bit more granular, and walk you through it. And this is why patience pays. I think some of the guys in here were talking about that. Bruce and Large Void were mentioning, hey, what times work best for them? I tried the fade here. I got stopped out. No harm, no foul. We're not going to get our panties in a bunch about one stop out. We're traders, right? Okay. So dialing in here, let's follow it, right? So we said earlier this morning, we're looking for the pullback, right? We're looking for first to see if we can demonstrate acceptance. We said we could pull back to 95. We pulled back all the way, tested yesterday's high, and tested the value area. Very important, because that was part of this morning's lesson, right? We got rejected from value once again, 2 days in a row. Artemis moves to the moon, rejected from value, right? Yesterday's high reclaimed. We traded higher, came back, pulled back to it, didn't touch it, it held. Okay, so then what? Our next phase in the logic chain was, all right, but that's not enough to warrant for us to just justify a trade, right? So what was our next step in the logic chain? All right, so we needed to see acceptance above the overnight high for confirmation of the move. Okay, come up, we pull back, this held, right? And then you can see here, this is a little bit granular, a little bit more of a micro. This is the 5-minute time frame. I really got to cover some of this trade, but I want to make sure I cover this lesson. We have the acceptance. And look, the pullback right here, right to 74.99. That's our entry. That's where I pull the trigger. Look, moving back to the Ninja Trader chart where I execute the trades. You can see here I'm long 74.99. I have 3 contracts left. I took one off at plus 5 points. It's at 75.04, and then I kind of got distracted with Rev, and I went to the bathroom. Yeah, so that's essentially what we outlined this morning. That's what we do here every day. We kind of walk through following train, staying in alignment with the day's dominant forces, making sure that we're on the right side of the trade, and you can see how that works out. Trading is not easy. It's simple, but it's not easy. We don't have to make it more difficult than what it is, right? Be a little bit of patience, a little bit of understanding of how structure works goes a long way in terms of helping us with that anxiety of not knowing, right? Of coming in every day, we kind of like that, placing haphazard trades or being a little bit impatient, right? All right, so let's look at this now. We have 16 points. We're tracking. We're looking for 75.20 to 75.25. Let's make sure we have an exit order up there. 74.19, 75 sounds good for me. I didn't take my second scale at 10 points, 75.09. But since that didn't happen, I'm going to take it here for 15 points. So you saw that, got that one off. So let's just give a big clap on that. Again, not really something to clap about. We do this pretty much every day. The guys who are in our private community are seeing it often. But I just want to dial you folks in, the ones tuning in on socials, letting you know. If you join our private community, this is pretty much what you're going to see every day. For you guys trading evaluations, guys, that's an account funded right there. If you go to pitbulltraders.com, purchase your evaluation from us, come in, join the community. We'll help you get past. We'll help you stay funded, and we'll essentially forget just staying funded. We're going to help you stay consistently profitable as well. All right, so pulling up, we're looking for 75.20, tracking the ES, tracking the Artemis move. Looking at internals here, 1.9 to 1 positive on the NYSE. Yeah, they're all confirming. Artemis is launched 7,500 with the target, but guys, there's no reason why we have to stop there, right? Let's go. Let's go. Blast off, baby. Let's go. Every day's payday around here. Yesterday I was talking to a trader buddy of mine, and I kind of screwed the pooch yesterday because I didn't. All right, look, all right, coming in on that target, guys, coming in on that 20-point target. Let's make sure we get the fill first, and then we'll chit-chat a little bit more. Order flows confirming. We're looking good. I hope you guys caught it. Let me know if you guys caught the trade. If not, don't worry. There's going to be another one. Let me know if you guys caught it. Don't get FOMO here, guys. Don't get FOMO, okay? There's going to be a pullback. Trust me. There's always a pullback. We're going to go ahead and lock some in here. There's always a pullback, guys. Stay patient. If you stay tuned in, we'll walk you through that. We'll get you set up. Don't worry about it. Don't get FOMO. Oh no, I don't have the algo on. God dang it. Come on, baby. Let's go. Let's go. Switch this to all. Make sure the risk parameters are right. Let's see. Check the risk on this. Don't want to blow this funded account. Yeah. So I was chatting with a. Hang on. Let me make sure I get this right before I float off on another tangent. All right, that looks right to me. Looks right to me. 2 shares. Why am I sharing 2 screens? Get back here. Blow this up a little bit. All right. Yeah, Stuart, I hope we have answered your questions. If I didn't, let me know. Simon, I hope I answered. Sorry, Simon. Simon, I hope I answered your question. Sorry for butchering your name. Yeah, I hope I answered it. We got the pullback to the 7,500. Simon, I hope you're on board. Hope you're on board, bud. Don't worry if you're not. We're going to outline the next trade setup shortly here. Let me just get this set up for myself. Remember, guys, I'm a trader first, but I'm trying to add value to everybody else as well. Trying to improve on it every day. Been doing this for about 3 weeks, right? And I was chatting with another. God, I'm reiterating all these conversations I had yesterday, but chatting with a friend of mine yesterday, and we talking about, just kind of how to. Wait, did I lose the connection? Nope. This looks like it's frozen. Okay. Okay. All right. All right. It was enabled. When we started to build this thing out, we were just talking about, should we do it or not? And we knew that we had something special, a bunch of consistently profitable traders that share information and help each other get better. And then that's when we thought, you know what, there are a lot of these prop firms out here just offering funding and walking away. And we wanted to do it differently. We want to kind of follow a different prop firm model in that if we can get, we're not trying to be the biggest. We're not going to be the apexes of the world, and we're not going to be the top steps of the world. Nope. Never been our intention. Our intention is to get to an extension of our small community. I'd rather have 10 elite traders by my side, all of us sharing information, sharing charts, sharing setups, sharing tools, and just crushing it, than to be a part of like the biggest show on the road, or where I'm tuning into YouTube and it's a circus and it's more of an entertainment show than it's a trading show. Here we're mapping out daily levels. We're walking through the process daily. We're trying to make traders better. And if you go to pitbulltraders.com and you purchase your evaluation there, this is what you're going to get. We're going to help you through it. You're going to join our private community. You're going to get access to the tools that we use every day here. Tools like SPYGATE, tools like the MIM, the market blueprint, the execution clock, all of those. And just as a quick heads up on that, I've been posting the market blueprint and the execution clock just for free on socials. It's going to be on socials for another week for free next week. And the reason why I'm sharing it there, I want everybody to understand the power of it. It does take me some time to put it together. Just being straightforward with you, it takes me about around 2 hours to put the market blueprint and the execution clock and get all that ready and put it out in the morning. So typically, if I was just doing it for myself, I just carry a rough draft of it. It doesn't take me much time. I just keep it on a Word document. You can see it here. But then it takes me some time to kind of map out the levels. So we're going to continue to offer for free for another week. But at that point, it's going to be just going to be a small nominal cost for what, you could probably, you'd be able to play for the market blueprint and the execution clock in one trade for a half a year. So look out for that. Stay tuned. But I'm going to continue to give it out for free for another week or so, just so that you guys can understand. I want you to understand the value add that it is. So for instance, guys, yesterday's market blueprint, right? Again, I'm probably the worst self-promoter, and so it's not hubris or anything of that nature, but yesterday's market blueprint, and this happens at least once a week. Last week it happened 3 times. Yesterday's market blueprint had the low of the day as a support zone. If you guys were tuned in, you saw it. I traded it live, and you can see here setup number 2 was a support buy at 72.92 to 72.96. Yesterday's low of the day was 72.99, so always consider that a hit. If we get to within 5 points of the level, you're good enough. If you bought that at any point, you did well. And that happens a few times a week. This is Wednesdays. Mondays had the continuation long is my favorite setup. That one worked out really well. Monday had the low of the day as well. Last week, Wednesday had the high and the low of the day. And that happens frequently. It's not magic. It's just structure and understanding which levels are going to have a higher probability of forcing action, which levels are going to which levels can either, you'll often see like a support level is a breakdown level, because if we get down there, it's going to be a shift in structure, a shift in the book. So just go out to the Twitter, @Manny_trends. In fact, I'm going to post a little tutorial on it today so that you guys can gain a little bit. It's kind of cheesy, but I'll put it out just so that you guys can see it. Let's see. Still tracking the yes. We just got that, guys. We got +5 on this trade. We got +20 on the trade. We're still tracking it, looking at 75.25. About to hit. We're also going to follow the execution clock in terms of exits, right? We have to start thinking about that. If you guys follow for a while, I don't like to micromanage the trade. I like to put it on, let it work. Let's see. What am I looking for here? All right, pulling back here. Actually, so look, this was the ad at 70. So I entered, and so this has got a little bit higher of an average price. I just realized that right now. Wasn't aware of that. So we're definitely gonna make sure we get paid on this, right? Took the risk. Let's get the reward. Hope you guys are following the clock and using that. If you're following it, then you know what we're expecting. All right, quick short explainers on the market blueprint and the execution clock are going to be posted today as soon as the stream is over. So look out for that if you want to know more. A lot of you guys are following it already, so this will be just kind of redundant for you. So just overlook it. Again, it's gonna be priced super affordable. It's not. It's just a couple of shekels. It's a couple of shekels for my time. Also to keep me motivated to do it every day, and to be. Sometimes I just know it in my head and I don't put it out. I just know it. I've been doing the clock. I've been following the clock for, 15 years. Yeah, it's been a while. All right, guys. So here's what happened, right? I just looking at this now. The algo got me long. Also, it's looking for those targets. Again, algos run amok. Just didn't know that happened. It just added 2, so whatever. We're gonna let that work. Let's see. All right, so those will be posted today after the stream's over. The timing guide is awesome and will add to anyone's success ratio. Yeah, Tex. Thanks, man. I hope you look. There's nothing else like it. There's a few tools are out there that tell you price tells you where you need. We needed something that tells when, right? So what you'll often see with the clock is that you'll hit a level and then it'll come back and retest during that window. But also it really helps with like the anxiety of knowing when to pull the trigger. It kind of sets your cadence for the day. Like if you're bullish, then you're buying the low swings. If you're bearish, selling the high swings. Watch their market, how useful it is, especially when we make more early morning highs and then we just rip and sell the whole day. Super useful tool. There's few things out there like it, guy. Like you can scour the internet, go for it. If you find it, let me know, because it was taught to me by one of my mentors. I've never been able to find it anywhere. And you can see here from this, just a quick shot of how I track it. I've been tracking it for, over this one is just for, this one started in 2023, but the other one was dated back to 2015. Been tracking it for a long time. It follows a certain cadence that you have to be aware of, and it kind of flips. You can see it here, cycle days and clock times. Track it in Excel. Been tracking it for a long time. All right, so we went back up. We tested higher, and there's a bit of a, let's see. Didn't I have the target in here though? I had a 1975 target. Come on, baby, pull up. Let's go. Get me out of here. I want this one out. Yeah, I don't want to be I want this one out. Okay. Oh, look at my average. Oh, that was horrible. WTF, man. I went from having a really great average to having a shitty, mediocre one. Excuse me. That sucks, man. Seriously. Oboe. Everything was all good just a week ago. All right. I should have left it on. That sucks. I'm glad I took it off though. Screw it. All right, here we go. Come on, baby. Pop. Let's go. Artemis to the moon, baby. Artemis to the moon. Down. And I'm going to put out something later on today. I told you guys uh, it's titled uh, working title, but is market news is bad. CPI sucks. CPI sucks. Right? Crude is at $100. There's a quarter in Iran, and yet we're up 18%. Right? And that's the one thing that you can extract forward. It'll serve you well. Is that the market is not the economy, especially if you're trading in the daytime frame. And that's kind of what I'm trying to drive home in that write up, is that if you're going to trade the daytime frame, you're better off trusting the news. You're better, there's more bad stuff on X than there is good stuff. There's more crappy stuff on Twitter than there on YouTube than there is good stuff. Shrink your network. What did the saying go? Your network is your net worth. Find a couple of, find a small network of talented traders that you guys align with in terms of mindset and approach, and work with those guys. Make sure you each get better, add value to that team. You can join our team. Go to, if you're not in our community already, go to Pitbull Traders, and you can join up there. There's another saying, I'm going to cliche myself to death today, but there's a saying that I love. It's iron sharpens iron, right? So good traders keeping each other on the same page, on the same path. Consistent profitability is what we're all about. So here, while people were, while a lot of traders were seeing bad news and selling the dips, I've been looking at bad news, and I've been posting it in our chat constantly. It's like, these bad news drops are a gift. Buy them, buy the dip. I post it constantly, BTD. Artemis launched from 63.53 on April 1st, on March 31st. On that, and it's been just nothing but straight line move. I mean, we're talking about one of the most awesome moves in the history of the S&P 500. And in hindsight, I just want to make sure that I'm on the right side of this move. I want to look back at it like, hey, you know what? That was an awesome move. And I know that I got paid because, my approach was solid. I'm going to have to remove this trend line from here. My approach was solid. I stuck to my process. If you're following someone or you think, make sure that they're adding value to your trading, right? At the end of the day, what this is about is, and of course, I'm not trying to be vain or something like that, but we're all here to make money, right? That's the bottom line. We're here to make money. And I'm hoping that I'm making you guys some money, just like I hope that you guys will help me make some money. Keep me on point, drop a comment, hit the like button. Let me know what you're thinking, what you're seeing, what am I missing? Or hang tight, learn from us, and then one day you'll be adding value to the team. Coming into 11:10. And as I was mentioning earlier before, we're actively working on hiring bring on someone to the team that's going to help us run the show, so that this way we can have better visuals. There's so much more to offer. I can't really go into it, all of it, but there are some things that I want to add that are going to add value, real time, help you make better decisions about your trading, help you get past those evaluations, and more importantly, guys, help you stay funded. Right? You hear it constantly. I hear constantly stories about traders churning accounts and the reset fees, and I cringe because okay, admittedly, I trade prop firms, right? I trade Pitbull Traders accounts, right? And I've been trading the same. I was telling my buddy yesterday, I've been trading the same two accounts So I passed in like I passed it in, it was the first week of February, and the other one I added a second, the first week of March. But follow, I'm on X and I'm just scrolling and I see that, a lot of traders out there are churning accounts and resetting. One guy said that he had reset 5 times in one day. If you're at that point, right, if you need help, come join us, join the team, develop the consistency needed to get funded and stay funded. We also have a good sale going on right now. Again, not to shill or be cheesy, but it's if you go to Pitbull Trader, select your evaluation, and use the code, the PIT, it gets you 30% off. Oh, and also you get SPYGATE for free, so it's hard to beat. I mean, what other prop firm is giving you the tools? I'm also trying to get you guys some other cool stuff that I'm using here. So hang tight, stay tuned for that. All right, let's take a look at the internals. 30-second timer went up. Man. All right. 1.6 to 1 positive on the NYSE, 1 to 1, 1.8 to 1, 1.8 to 1 positive on the NASDAQ. The VIX is flat. Oh gosh. Hey, listen up. The Russell is just breaking out, approaching its overnight high. So now it's just a broad-based rally like yesterday. Now even the Russell's breaking out. If you guys are trading Russell, I traded the Russell for a long time. It's really tied to rates, and you can see how rates are coming off and the Russell's rallying. So yeah, it kind of makes sense. All right, moving higher here. I was trying to get long in this account, in this one here, and I just continuously missed it, man. Continuously missed it. That blows. Really blows, but whatever. What can I do? There'll be a pullback. If you guys are, let's go over it. That's right, I forgot. Let's go over it. All right, so guys, if you're short, if you're flat and you're waiting, hey, good for you, right? You're showing some discipline. You're showing some self-control. That would serve you better over the long haul than it won't. Make sure I just have this right here. 28. I have 2 left. I want this off at 25. I need this off at 25, guys. Wait, leave that one there. This one was 26, 28. I need one off at 25. That was the original target, top side target. Don't want to get greedy. If you're flat and you're exercising some discipline, here's what you should be looking for. Guys, heads up, we're hitting that target now, the head and shoulders target. If you're exercising that discipline, guys, open up a 15-minute chart. We got a trend move going on here. Wait for a pullback to the 21 period moving average. That's it. That's all the thing that matters. You have to exercise some patience in it, but it will pull back today. And when it does, you're going to feel great because you exercise that discipline, that patience. And when it pulls back there, if it aligns with the execution clock, buy it. Make sure your risk is manageable, but don't get shaken out. All right, coming in. All right, got that target at 75.25. 75.25 for plus 7 points. I'm in the runner now. Might as well just give this some legs. See if it does a Forrest Gump on me and explodes to the upside. Why not? Why not? Right? I helped that little lady across the street the other day. Why can't I get the trading gods on my side? Explosive move higher. Thanks, J Mark. Yep, thanks. I'm hoping everybody caught some of it. You guys, you guys, I shit you not, that is like really meaningful. I kid you not. I mean that so sincerely. I hope I'm making you guys some money. I would not be doing this if I didn't think I could make everybody some money. Not I just like be listening or be passive. But J Mark, you've been around for a while, right? I think you've been around for a while, and you've seen me trade consistently over the course of those years. Yeah, yep. So I know you're from the IM Pro, and I've been trading the same way consistently, and that's why I thought we could add some value. I knew it was going to be hard trying to execute live, and there's going to be a learning curve with that. But ultimately, teaching, education, getting guys funded, getting them into funded accounts, and then keeping them consistently profitable over time. There's a lot of nefarious prop firms out there that just want to see you reset, sell you. They give you funding and then they walk away. I feel like we can do it better than that. Danny Riley, who is, our CEO of Pitbull Traders. Danny Riley's got an excellent reputation in the industry, well known, always been known for helping out the smaller trader, the little guy, sticking up for the little guy. And those are really our ethos of what we're doing. Just keep taking those longs, man. Just keep taking those longs. Let's see what we're looking for here. Guys, we are coming into that window very soon. If there's my favorite clock date, it's S2L. S2L is probably my favorite. S2 and S4. Oh, man, 38. Let's go up to 33. Let me see, 18, 28, 33. Yep, 33 is my 33 is when I'm walking out. I'm taking it. I hate to take myself out of the market. I'm typically, I'll just hold it all day. But there's a reason for that. In fact, I'm into that time window now. That felt like a little bit of greed, though. Seriously, I'm not. That's not the way I want to operate. That's not the way I want to operate. All right, guys, I'm going to go ahead and take the 13 points on this one and close it out. Good trade. I'm happy with the result of that. I'm okay taking that. What I didn't like about that was that I kept extending my target higher and higher, and it felt like greed was creeping in. And so without thinking about it too much, I just went ahead and closed it out. All right, guys. All right, guys and gals. That's going to wrap it up for me for today. Wrapping it up. Volatility isn't over. Remember, we're really super strong bullish. Day 3 of the Artemis to the moon move. Remember, you've got the market blueprint on the X feed at Manny_trends. You've got the execution clock. You've got the levels. You've got the setups. You've got the timing. It's all on your side. Again, if you want to be part of the community, go to pitbulltraders.com. You can sign up there. If you've got anything out of this at all today, do us a favor. Go to the X feed. Drop a like on, especially you guys watching on YouTube. It'll go a long way if you hit the like button, subscribe to the channel. We're doing this every day. We're going to come out and add more value each and every day. Drop a comment or subscribe. If you want to go deeper, you can always shoot me an email, manny@pitbulltraders.com. Remember, react, don't predict, and we'll be back tomorrow. Same bat time, same bat channel. That was pretty lame.